Jeannie King with TXR Homes, joined today by Spencer Lugash, broker for TXR and our in-house counsel, which was so valuable.
Hi, Jamie.
Hello, thank you for being with me
Of
today.
course.
I wanted to come on, have you come on and introduce you as you know, it's so important to have that immediate real estate advice sometimes from an attorney. So I wanted to know if you could quickly touch on some of the hot topics today, or what you're particularly seeing in this crazy market, things to look out for.
Yeah, I think no doubt right now the biggest issue is just our general lack of inventory, which is leading to, you know, this seller's market that we're in.
Yeah.
And it's like a hyper version of a seller's market.
That we've
you know,
never seen. I've never seen it yet.
Yeah. So we're seeing, you know, properties that go on the market that have 30 offers that come in. Some of them, many of them, without even seeing the property. Offers that are coming in for $100 or more $1,000 above asking.
And sometimes still not even winning the deal.
And absolutely, and not winning the deals. And so it's really crazy, especially if you're a buyer. It can be very discouraging. It can be very stressful because you're putting this is your 10th house that you put an offer on, and you're just not getting it, and you're having to get to a point where you have to really, aggressive is like not even the right word.
Right.
You know, both with your pricing and with the terms. And so again, that's
swords flailing.
Yeah, and because it's such a seller's market, the sellers are now in a situation where they really have a lot of power and control over the negotiations, and they are asking for things that are not traditional. Let's say, I won't say not normal, but not what you would typically see in a real negotiation in one of our more standard or traditional markets.
Right.
And so they are in the driver's seat, and they are asking for a lot of things. And so, you know, a good example is appraisals. Because, like I said, we're seeing properties go, at least receive offers for hundreds of thousands of dollars over not only asking price, but over potentially what the house is really worth. And therefore, the appraisal is not going to come in. And then what does that mean for a buyer?
But if you're paying cash, that's one thing. But if you're getting a loan,
yes,
which the appraisal is for the lender.
Right. And so a lot of times what's happening now is buyers are coming in with offers either just with no appraisal contingency right from the get-go, or very shortened appraisal time frames. And it's important for them to understand what that means, in that it means if the property appraises for less than the purchase price, they can still purchase the house, but they are basically agreeing up front that they have the cash, the additional cash to come in with. That's the difference between that appraisal price and the purchase price, because the lender will still loan on the appraisal. But if you are getting an 80% loan and you're putting 20% down on a home, and the home appraises for $200,000 less, and that's pretty extreme, but I have seen appraisals that have been $150,000 swing, where it came in low, they had it reappraised within like 3-4 days, and then it came in $100,000 above. I mean, it's crazy.
It's insane.
So
it's the Wild West.
So it's important that you understand that if it comes in low, the bank will still give you 80% of what it appraises for. But now not only do you have to come in with the additional 20% of the value of the home, but you have to come in with that extra money of what you agreed to pay for the home.
Right.
And if you remove those contingencies right away, or earlier, or before you really know whether or not it's appraised, and you can make an educated decision on how you want to proceed, a buyer can then be at risk of losing their earnest money deposit.
Right.
And one of the things that I have seen that is important for buyers to look out for and make sure that they're dealing with, an educated and experienced realtor, is that sometimes, fortunately, a realtor will advise a buyer, that it's okay to write an offer without an appraisal contingency, because don't worry, if the house doesn't appraise, we still have our loan contingency in place, and the buyer can cancel the contract based on the loan contingency and still receive their deposit back. But that, in fact, is not the case and is not true.
Not
as
good.
I know you know. And that is because the appraisal, people don't understand, the appraisal is for the property, and that determines whether or not the property qualifies.
Right.
But the loan contingency is for the person, for the buyer. And so once you've removed the appraisal, the only way that you can back out based on your loan is if you as a buyer don't qualify for your loan based on income or other means.
Credit check at the end.
Right, but if it's only because you can't get the loan now because it didn't appraise and you've already removed your appraisal, you can't use your loan contingency as a backup plan. And so I do see that a lot, and that's very scary and something for buyers and agents to be.
It's very scary because no buyer ever wants to lose their earnest money deposit. No agent ever wants you to lose your earnest money deposit. No one wants the deal to fall through.
And again, right now, because of just where we are at in the market, people are putting in higher earnest money deposits. Now, granted, no matter how much money you put in, by law, you can only really risk 3% of that, no matter 3% of the purchase price is the maximum that the seller can get.
We typically do 1, but yeah.
Yeah, here in San Diego, that was the case, but again, I'm seeing higher earnest money deposits being put in as a way to differentiate, and for buyers to differentiate themselves from other buyers, as well as buyers agreeing to release deposits much earlier, which is again not typical. That is not typical, and to some extent not even really legal. But it's happening. So those are I think two: the appraisal loan issue and deposits, and lifting those deposits or releasing those deposits before close of escrow are two of the big, really unusual changes that we're seeing in the market right now. So those are things that buyers really should be very aware of and make sure that they totally understand what's happening before they agree to that stuff.
What you're getting into. And thank you so much for that. And if you have any questions about the terms, contingencies, EMD, what does that deposit mean? What are these contingency removal periods? Please put your question in the comments, or feel free to reach out to me. I'd be more than happy to help you. I know Spencer would be more than happy to help you. Thank you so much for taking the time with me today. Busy guy. I really appreciate it. Feel free to reach out to me. Hope you all are taking care of yourself. Have a great day.
Bye.
Hot damn.